Here with more markets analysis is XBTO Group Head of Trading, Paul Eisma. Paul, welcome.
Thanks for having me. How are you?
I'm hanging in there. Nice jersey. So, XBTO was founded in 2015 and provides institutional market making to major global trading platforms. So first, I want to get your take on Bitcoin's price action today. Bitcoin's down 5% the last 24 hours. What gives?
Yeah, I mean, your previous two guests, basically nailed the factors that have been driving at least the past 24 hours, right? I mean, we've had a lot to consume, over the past 2 or 3 days, past 7 days. But yeah, the last 24 hours has been driven by, obviously, the mempool congestion in and around, the BRC20 related, everything that was, your two previous guests spoke about, right? The delay with, that was, in Binance, it's, I guess, almost like a deer in headlights for the, the Bitcoin, protocol. And I think it's going to be fine, right? It's, this is a new, dynamic, obviously, with the upgrade of Taproot. Not that this was expected, but this is, I guess, the growing pains of the network. So I think it'll be fine in the long run. But yeah, it's had a little bit of a delayed reaction for sure. I was expecting, you didn't see the price reaction initially, and then today, obviously, we're seeing, as you mentioned earlier, a decorrelation, with traditional risk assets. Actually, they seem to be leading. I know it's not, but at least not today, or that's I guess debatable. But yeah, This is I think we can work through this. We're really stuck in this range still, and Friday, with the non-farm payroll number, which was everything came in strong, right? And that was on the back of the interest rate hike and the sort of hawkish pause, I guess, if you could define that, what Powell did. And so we were in the high end of the range, but we're still in a range. I realize it's 7, 10, 15%. It's sort of a big range, but it's, again, I think if we do break, lower to 27, 26.5, you're going to see buyers, step in because we're going to be out of that range. You could see some momentum guys coming in as well. But in reality, I mean, we're second quarter, we've been 25, 30 the whole year. It's, for the most part since, that one historic weekend. But yeah, I think it's, let's see how the inflation number comes in on Wednesday. Hopefully we can, get through this, I don't want to call it spam or anything related to the BRC20, the ordinals, the inscriptions, everything that your previous guests were speaking about. So growing pains. We'll be fine.
Paul, you mentioned two things, and I want to ask you about them both separately. You say that we're going to be fine when it comes to the blockchain, quote-unquote, spam. What does that mean? Does that mean that we're going to go back to the old fee rates where I could set one V byte per sat, or are we going to see this new paradigm where you can't do that anymore and fees are just higher?
Yeah, I mean, I think it's, like any young and growing nascent technology that gets upgrades and modifications. This is just part of it, right? And this will be just looked at as a blip in the long term development of this particular technology. That's what I'm speaking about, right? There's I would prefer, it's kind of too early to get into the attack or the war. That it's this is part of the growth of the network, right? And I think yes, I do respect the OGs. I'm more practical. Utility will come, things like everything that your previous guests mentioned, Lightning Network. This is part of the growth and the evolution of Bitcoin, and the path is not straight. So that's all I was referring to, right? It's it's a less volatile asset. It's still fairly volatile. I mean, it's people get involved in all these moves, and 2-week implied vol is 48, right? It's a 2.5% move, and which is like 700 points, and we basically just covered that in the past few hours, right? So Realize has been delivering. So there's opportunity. I mean, as traders or market makers, this is kind of what we need to be able to have movements, right, as opposed to something straight up or straight down. I'm not going to mention the other sort of coin that did not go sort of zigzag, but sort of straight up and straight down. But that's all what I mean by this is all part of the growth and the evolution of this technology.
Right. And then on the other thread, we were talking a little bit about macro narratives, inflation number coming in. What, if you had to guess, what's going to come in and how will Bitcoin react? I know it's just a guess, but what do you think?
Yeah, no, sure. I mean, that's fair. You know, I guess the disinflation has been trending in the right direction, right? The previous number, you know, maybe was a little bit suspect, right? And I think it's gonna, gosh, you know. So it's a dual mandate, right? We just had the first with NFP, and you know, that was really strong. Inflation, you know, we'll have to see. I mean, I think really what asset markets are looking for is, you know, something, you know, not too strong or too weak, right? Because I think if something comes in and around, like, I don't know, plus or minus, you know, some decent low standard deviation of what's expected, then I think, okay, you know, July is, you know, maybe still too early for, you know, a pause or a pivot, you know, to rate decreases. And then they can have some confirmation that, okay, well, you know, inflation trending in the right direction. It still exists. It's still above, you know, the 2% level, which, you know, the Fed is seeking. It's still above the core PCE level that they're seeking as well. So, you know, Powell has been clear that he's going to keep rates at this level for longer than the market is implying, right? The reality is we are just at the levels of rates that we were pre-COVID, right? We just got here, right? And yes, I understand that there's a delay, right? Probably 12 to 18 months, right? And it, you know, so it started about, let's just say a year ago, right? In like late first quarter, Marchish, right? So, you know, yes, we were beginning to feel these effects. Yes, there's the systemic effects of what's going on with the banking system. Hopefully that's not the tip of the iceberg. Yes, this is what happens when interest rates go from 0 to 5% in a very short amount of time. And, you know, obviously when bond prices are inversely related to yields, right? So, you know, I think it's, you know, that's what I'm sort of more hoping as opposed to trying to guess. But I think, listen, if I do think the rate markets are a little too optimistic with the July, you know, rate cut, and you know they have to remember that you know the dual mandate has, you know, theoretically nothing to do with the economy, right? So the Fed will, I'd be comfortable with putting the economy in a mild recession, right? It's basically what I took from last week and all the data points before the inflation number is that, you know, this wasn't my base case, but you know, the soft landing that the Fed is actually aiming for, you know, it's a little bit more likely given the numbers and the data that's come out so far. So let's see what comes out Wednesday, and then you know, and then go from there, right? Because that's, you know, soft landing is, you know, the Fed, listen, they make mistakes, you all make mistakes, right? But what they're trying to do is obviously very difficult, right? So, but you know, soft landing, well, you know, so far so good, right?
Yeah.
So
we'll see how it goes, Paul. Paul, that's unfortunately all the time we have today for you. I appreciate you sharing your insights.
Of course. Thank you for having me.
Have a good one. That was Paul Eisma from XBTO Group.